Hello everybody, and welcome to our discussion regarding land leases. I'm Bacodari from the Bacodari Team at Douglas Elliman.
I'm Gabrielle Correo with the Bacodari Team.
Rod Reamer, Home Lending Officer of Citibank.
Jonathan Helfer, a partner at the law firm of Romer & Voss.
So we have an incredible panel today, very, very esteemed experts on a very interesting small subsegment of the market, which is kind of like a unicorn because these apartments are always so well priced and they're in great locations. But if the building's a land lease, sometimes there's some concern or some reservations about what is a land lease and how to deal with land leases. So at this stage, what we'd like to do is get into a little bit of a discussion about what actually is a land lease and how to qualify it. Good leases versus bad leases with our team of experts. So Jonathan, why don't you tell me a little bit about some of the things that you encounter when people are looking for land leases? Like, what do you look for as an attorney in a lease?
100%, and we were talking about it briefly before. Sometimes people hear the word or the term land lease, whether it's an agent, an attorney, and it's run away, don't ever look at it, you're crazy. Right. And honestly, I think that's the wrong approach, as we were discussing. It's like anything else, it's the terms of the actual lease. And we'll get into that in detail, but it's possible that you have a really good lease. This particular building actually has a good lease. Some of these leases, I'll be honest with you, they're tricky, but it's dissecting and really examining the actual terms of any particular lease, because some of them are great investments, they're great for buyers. Mm-hmm. Others, yes, I would say run away, but you can't blindly and unequivocally say, don't ever buy into a land lease building, because I think you're doing a disservice to the client by doing so without first examining the terms of that lease.
Right, right.
So Jonathan, when you're reviewing a lease for a client, what are like the top things that you look out for that you would want to bring to the table?
Sure, the very first thing we're looking at is the expiration date of that lease. How far out does it expire? Is it set to expire, in close proximity, or do we have another, 90, 99 years left on that lease? And you run into issues, there's a couple of issues you can encounter. If a lease is set to expire short term, two issues you encounter. Number one, you guys as the agents would be aware of it, just it affects the value of that apartment. So essentially your value diminishes as you reach the expiration date of that lease unless something's been renegotiated. And the other aspect of that is when you have a lender involved, if the lease doesn't exceed, if the expiration date isn't at least 30 years beyond, you potentially run into an issue with a lender. Ron, I put you on the spot with that. Just if I have a lease that expires in 20 years,
Yes, in those situations, we would look for a buyer to take out a 15 or 20-year fix. They can't do a short-term ARM, 5, 7, 10-year ARMs, or 30-year amortized loans. So they have to do a shorter-term amortized mortgage product, such as a 15 or 20-year fix in that example, right, just so the mortgage term doesn't exceed the length of the lease.
Yeah, in that situation too, you have to remember that's not necessarily specific to a land lease. That's going to be a co-op or any building where
lease in a co-op.
Exactly.
Yes.
Anywhere where you have an expiration date that's less than 30 years.
Yes.
So not so different in that sense. The only difference being with a co-op, obviously, you have the opportunity, the board can extend the terms, no problem, with a proprietary lease with a shareholder vote, where the land lease is just different as you're able to extend it through required negotiation with the landowner directly.
So it sounds like what the buyers of land leases really need to look for, as you mentioned, is how long the lease is for, and then the other part is when the lease gets renegotiated for the ground rent, right? Because in land lease buildings, you normally pay, in addition to your HOAs and taxes, you also pay ground rent, right? Mm-hmm. And how that's calculated and when that gets negotiated, is that something you look for also?
That's absolutely something we're looking for. The biggest thing a lot of buyers are looking at, let's be real, is money. How's this going to impact my bottom line, my pocket? Mm-hmm. So we need to know, look, today the rent and my maintenance is X, but 5 years from now after I buy, is X going to increase exponentially? Mm-hmm. And we have to dissect the lease, just see how it is subject to renegotiation. Are there escalation clauses? If there are escalation clauses or rent increases, what are those based off of, right? So is it going to be fair market value, which to a large extent is unknown. We do see fair market values on land increase pretty significantly, so those can lead to significant increases. Is it a set sum? We were discussing that earlier. That's a lot easier to budget for because I know my rent is increasing across the board through the expiration date of this lease by, I'm making up an arbitrary number, 3% every year. It's a set cost, right? Or you have, inflation, the CPI, mm-hmm, which also can be a lot easier to understand and really extrapolate when you have somewhat, it's not a set cost, but you can look historically what those numbers look like, mm-hmm, how that's going to impact me, and when is that subject to renegotiation? Is that happening again? short-term or is that a long-term situation? So those are all items that we're looking for when we look at these leases, absolutely.
So Ron, is there anything that is different in the process when you're financing in a condo in a land lease building versus a traditional condo?
Yeah, I mean, we're going to look to approve the building like any other, building that, we're submitting to our internal departments. For condo buildings in general, obviously they're mostly on land leases. And Fannie Mae and Freddie Mac have been recently changing their policies and guidelines over, especially the last couple of years, and with regards to many different aspects of the building. For condo buildings in particular, Fannie and Freddie recently changed it where you're not actually allowed to get a standard conventional loan. So you have to work with a bank that will offer portfolio options for clients, which basically just means 20% down payment, 6 months in reserves, and they still get very competitive rates for that too. So it's just important to make sure the bank that the client is working with has those buildings approved.
And so Citibank can offer a portfolio?
Yes.
And then Ron, just on that point, I have a question then. We know by looking at a lease, I come to you and say, Ron, the rent is going to, reset 3 years after this person buys or 2 years after this person buys. Is the lender looking at what the potential increases look like in order to approve that buyer, or are they just looking at what the numbers look like today?
It's a great question. At the moment, no. I wouldn't be surprised if that changes because it makes sense for lenders to qualify a buyer on future increases in maintenance. But at the moment, we're underwriting buyers based upon the current HOA that's set up in the contract and agreed upon terms for that client.
That's a great question, actually. Well, very interesting. So, to summarize, it sounds like land lease buildings are great buildings to buy in, but not all land leases are created equal. And it sounds like the first thing a buyer should do when they're considering buying a land lease is talk to a qualified attorney that can review the lease for them and a good banker who can look at the financing side of it if they're planning to finance. That way they can make an assessment if it's yay or nay, if it's do I want to buy this or not want to buy this, right?
Yeah, and I think under any circumstance, it's the agent, the mortgage banker, us as the attorney, it's just flooding the client with information and putting them in a position to make an informed decision.
Right. And just briefly, can we touch a little bit upon the battery park leases? Because they're different, I think, than conventional.
Battery park is much different. Number one, unlike a lot of the buildings we were discussing, referring to with land leases, you have private landowners. Battery Park City the landlord is the city of New York. It's the DPCA, the Battery Park City Authority. Those leases are actually much different, but nonetheless, all of Battery Park City is land lease. One of the big things I would say, and I think there's going to be some spillover into the private sector with private landlords as well. Battery Park City residents created this Battery Park City Coalition because there were escalation clauses built into those leases. And if you looked at the numbers, a lot of those were based off of fair market value. And they were looking at pretty significant increases in somewhat of a short-term period of time. They created this coalition, they negotiated with the city, and they were able to save most of those buildings. Not every building in Battery Park City was involved in this, but hundreds of millions of dollars that they otherwise would have had to pay collectively as a building. But again, you're dealing with the city, and I think you have a little bit more of a public policy issue when you're dealing with the city as opposed to a private landlord. But that is, yes, it's all Battery Park City. Those leases were supposed to expire in 2069. There's negotiations not set in stone to really push out the expiration date of those leases as well. So we will see. We will see what happens there.
So fascinating.
To be determined. Yes.
As a broker advising a customer, trying to assess the value of a land lease apartment, let's say, is there some formula? I know it varies building to building based on the term of the lease and other factors. But like if you have a comparable apartment outside that building that is a very solid comp in a non-land lease building, there's no set formula to it, but is there any way that you could advise brokers as to how to come up with the right number for that apartment?
Yeah, I mean, that's a great question. It's just based on so many variables.
It's like a valuation question.
Correct.
Yeah, and normally the way I do the valuations of comparing land leases versus non-land leases is like the average home ownership is, let's say, 5 to 7 years. Let's say you want to be conservative and say you're going to own the property for 10 years. And what is the distance between a non-land lease apartment's carrying costs over that term versus the one that, the carrying costs of the land lease apartment you're considering? And that difference, if that money were to be invested in, like a conventional, return account, how much would that impact the property? And usually that's the difference between the co-op and condo and land lease valuations. That's kind of how we do it.
Okay. I just feel a lot of brokers don't know how to come up with the right number, and then if
Right.
they can't come up with it, how are they gonna advise their customers to bid properly on it to get the apartment?
No, and and we rely on you guys as the agents for
Yeah.
evaluation. Clients don't come to me.
Yeah,
I know.
What's a comp, right? What do you think is
Exactly,
worth?
no, I know.
I would say, let me call him.
Exactly.
Right? Yeah, no, it's tough.
Like, I'll give you an example. I've sold many units in this building, and I can tell you that, like, if you look at the neighborhood and you comp out similar apartments and similar buildings, there aren't many lot buildings like this, but the closest ones, it's about $1.7 million to $1.8 million that this would be worth if it was a condo. So to get it in a land lease building for $995 is is a great deal.
Yeah.
So, I mean, but of course, I'm not the decision maker.
No.
The client has to decide.
And each-
That's a good question. Thank you, Bill.
So Jonathan, what are some of the risks involved in buying in a land lease building?
Sure, as we touched upon earlier, you're really looking at very often an unknown increase in your monthlies. So you may have somebody come in and say, hey, the purchase price is great, my monthlies look great, this is what I want to be paying. We don't really know, and look, you don't really know, to be fair, you don't really know in any other building either, right? Things come up, insurance premiums go through the roof, real estate taxes go through the roof. There's no real way of truly saying, hey, this is what my monthlies are going to look like. I just think it's a bit harder to extrapolate as you go into the future. So where you have somebody who says, this is affordable for me right now, when the lease is subject to reset, how it resets, and what those rent increases look like, it may reach a point where it becomes semi-unaffordable for the person who it's affordable for right now. And I think you just have to keep that in mind before buying into a building such as this. Or not such as this, rather, before buying into a building that's a land lease building.
If clients are buying in a land lease where they can take out a 30-year fix, that's gonna be the cheapest monthly payment. If it's a lease that expires in 20 years and have to take out a 15 or 20-year fix, the payment's gonna be higher than a 30-year fix. And they have to obviously budget for all those escalations as well. So it comes down to affordability.
Yeah, and I think it also goes back to valuation of the asset. As you get closer to a reset or really to the expiration of that lease, you just need to keep in mind the value of your asset may decline over time. So I think you have to approach it with a different mindset than you otherwise would if it were a straight co-op or condo where you own it that way.
Well, thank you. Thank you, Jonathan.
Thank you.
Thank you, Ron, Gabrielle.
Thank
you very
you.
much. And thank you, everybody, for watching. I hope you enjoyed this discussion, and hopefully we'll see you very soon. Thank you very much.
Thank you.
Thank you. Thank you.